Taking a look at interest rates today, I want to focus on the 10-year note. The 10-year note finding a bid today. We saw it reverse yesterday's selling pressure. We saw a little weakness on Friday, some further selling pressure yesterday, but today we're seeing it bouncing back, pushing back up right around the 130.24 level. We did see a high of 130.30 half and a low of 130.11.5 or 11.5. So again, closing near the top end of the range for the day. We did see the 10-year rallying throughout the session for the most part, as we saw equities under some selling pressure today, giving up some of the ground that they have attained the last couple of days. And I think that's why you're seeing this basically risk-off type of mentality today, as we see money now flowing back into the bond market after maybe rotating into the equity markets as these momentum plays continue to unfold in the marketplace. So I think as you continue to see some of the factors here, as we're seeing the rotation here, you're looking at the yields now pushing back to the lower end of the range for sure, but still not down to those lows that we saw last week. Current yield right around the 1.55 level on the 10-year. Now, I can tell you when you look at the price movement today between the different durations, the 210 is what a lot of people have been watching, and we've been talking about that for quite some time. It saw condensed a little bit today, some pressure there, but nothing too pronounced. We're still seeing the 10-year running about 5 basis points ahead of the 2-year, so no inversion at this point. A little bit of a compression today, but nothing too significant at this point to indicate that we're going to go back towards that inversion that we saw last week. As far as the range for today, we did see a high yield actually this morning of 1.598. So definitely well off of those higher yields earlier in the day when we saw, again, the 10-year finding some buying pressure throughout the day. I want to point at the data here the next couple of days. I think that's really what the market's going to be focused on as we roll towards the second half of the week. Tomorrow we get the Fed minutes, and I think the market's going to be very focused on that. And then on Thursday, we get the ECB minutes leading into Chairman Powell's speech on Friday at Jackson Hole. So the next 3 days, I think, are going to be very critical from a data standpoint. When you look at how the bond market's going to react in the note market, look at that 10-year note. Again, right now, you're looking at the CME Fed Watch tool pricing in a 95% chance of a 25 basis point cut in September, 5% chance of a 50 basis point cut. So basically, heavy probability now for 25 basis points in September. But where it gets really interesting is when we look at October and December, where it's still high probability of at least one, if not two more rate cuts before the end of the year being priced into that CME Fed Watch tool. And that could change dramatically here the next couple of days as we get some more data points for the Fed to look at, for the market to digest. Starting off tomorrow, again, with the Fed minutes and culminating on Friday with the Jackson Hole speech from Fed Chairman Powell.